Welcome to an online session of Class 12 Accountancy Unit Partnership Accounts, Part Admission of a Partner. Today we are going to solve a numerical question related to that topic. Here question. A and B are partners sharing profits and losses in the ratio of 3:2. On 31 March 2015, their balance sheet was as follows. Liability side, capital A rupees 8 lakh, B rupees 4 lakh. General reserve rupees 1 lakh 50,000. Creditors rupees 2 lakh 50,000 and bills payables rupees 1 lakh. Asset side, cash in hand 25,000 rupees, cash at bank rupees 5 lakh 75,000, debtors 50,000, stock 3 lakh, building 5 lakh, machines 2 lakh, goodwill 50,000. Balance sheet total 17 lakh. They agreed to admit C as a partner with effect from 1st April 2015 with 1/3 share on the following terms. So C's share will be 1/3. Point number 1, adjustment. C will bring rupees 5 lakh as capital and 2 lakh as his share of goodwill, but he could contribute only 1,20,000 rupees towards goodwill. It means total value of goodwill for C is 2 lakh, but he brings only 1,20,000 rupees in cash. Remaining 80,000 will be adjusted towards C's current account, otherwise capital account. Adjustment number 2, building and machines to be depreciated by 5%. On the asset side of the given balance sheet, building amount 5 lakh and machines amount 2 lakh. Calculate 5% of both these amounts and give a debit to the real revaluation account. Next, stock to be revalued at rupees 4 lakh. So old value of stock is 3 lakh. So 1 lakh rupees increased. Whenever we are revaluing the asset, if its value is increasing, it is a revaluation profit. So it will be shown on the credit side of revaluation account. 4 lakh minus 3 lakh, 1 lakh rupees we will show in the revaluation account. Next, there is an unrecorded assets worth rupees 1,20,000. Unrecorded assets also showing on the credit side of revaluation account. Last one, 1 month salary of rupees 30,000 is outstanding. It is a liability. So it will be shown on the debit side of revaluation account. Question, prepare revaluation account, bank account, capital account of partners and balance sheet after the admission of C. First of all, we will have to prepare a revaluation account. There is no balance given there in the revaluation account, so there is no opening balance. We are going to start it with the building and machinery. 5% of 5 lakh rupees, it is 25,000 rupees. Debit side of revaluation account, to building account 25,000, to machines account 2 lakh multiplied by 5 by 100, it is 10,000. Then unrecorded assets coming on the credit side, by unrecorded assets 1,20,000, stock to be revalued 4 lakh, so old value 3 lakh, difference 1 lakh, it is increased, so by stock account 1 lakh. Now on the credit side 2 items and debit side 3 items. So here credit side total exceeds debit side total. So first of all you will have to total the credit side. 1 lakh plus 1,20,000 is equal to 2,20,000. The same total we are transferring to the debit side, 2,20,000. So three items given there in the revaluation account debit side, 25,000 plus 10,000 plus 30,000. Total these three amount and subtract from 2,20,000. You are getting 1,55,000. This 1,55,000 rupees we have to divide among old partners in their old profit sharing ratio. So here debit side to profit transfer to Ace Capital 1,55,000 multiplied by 3 by 5 amount 93,000 and B's Capital 1,55,000 multiplied by 2 by 5 amount 62,000. So this amount we will transfer to the capital accounts of A and B. Next account we are supposed to prepare is bank account. Check the old balance sheet. Cash at the bank given, that is the opening balance in the bank account. To balance brought down 5,75,000 rupees. Then check what are the amount brought by the new partner C. To C's capital account 5 lakh. To premium for goodwill account he brings only 1,20,000. Do not write 2 lakh, only 1,20,000 he is bringing as cash. So that is the only amount you are going to write against premium for goodwill account. Three amounts are there, 5,75,000 plus 5 lakh plus 1,20,000. Total it is 11,95,000. We are transferring the total to the credit side and by balance carry down the same amount 11,95,000. This 11,95,000 we will show in the new balance sheet. Next account we have to prepare it is capital account of partners. Now three partners are there, A, B and C. So you will have to draw three amount columns on both the sides. And first of all you will have to transfer the opening balance of capital account. Only two partners were there, so two partners will have the opening balance. By balance brought down, A's column 8 lakh and B's column 4 lakh. The next item you have to check whether there is any accumulated profits or loss given there in the old balance sheet. If accumulated profits given, we have to divide this among the old partners in their old profit sharing ratio. Here general reserve an amount of 1,50,000 is given. This amount we are dividing among the old partners in their old profit sharing ratio. So second item on the credit side, by general reserve 1,50,000 multiplied by 3 by 5, 90,000 in the first column and second column 1,50,000 multiplied by 2 by 5. In B's column amount 60,000. Next we have to transfer revaluation profit. It is profit, so it is coming on the credit side of partners capital account. By revaluation account, A's column 93,000 and B's column 62,000. Next, new partners goodwill. Total amount is 2 lakh, but he brings this 1,20,000 as cash. Remaining amount he is not bringing as cash, so we are adjusting the remaining 80,000 against his current account. So first you have to write by premium for goodwill 1,20,000 dividing among all two partners in their sacrificing ratio. Here no need to calculate sacrificing ratio because new ratio is not given. In the case where new ratio is not given, we have to consider old ratio as sacrificing ratio. So A's column amount 1,20,000 times 3 by 5 amount 72,000 and B's column 1,20,000 multiplied by 2 by 5 amount 48,000. Next, by C's current account, remaining 80,000 of goodwill we are adjusting against his current account. So this amount also will be credited to A and B. So by C's current account, amount will be shown in A's column and B's column. 80,000 multiplied by 3 by 5, 48,000 in A's column, and 80,000 multiplied by 2 by 5, 32,000 rupees in B's column. And the last item, by bank account 5 lakh rupees in C's column as his capital. And debit side, in the old balance sheet, otherwise given balance sheet, an amount of 50,000 is given as goodwill. This goodwill we have to write off. So this amount will be shown on the debit side of A's and B's capital account. So to goodwill, old ratio, we are transferring this amount to A and B. 50,000 times 3 by 5, 30,000 in A's column, 50,000 times 2 by 5, amount will be shown in B's column. That's all. Now on credit side, A's column amounts are 8,90,000, 93,000, 48,000, 72,000. Total 11,03,000 in A's column. B's column total 6,02,000 and C's column total 5 lakh on credit side. These totals we are transferring to the debit side and subtract 30,000 rupees from 11,03,000 in A's column. To balance carry down, you are getting 10,73,000 rupees. And B's column, we are subtracting 20,000 from 6,02,000. You are getting a balance of 5,82,000. And C's column, nothing is there to subtract. So you have to write 5 lakh as the balance for C. Now to balance carry down, A 10,73,000, B 5,82,000 and C 5 lakh. These are the amount we are writing there in the new balance sheet as capital. New balance sheet. Check the items given there in the old balance sheet. Capital account. New capital account you have to write in inner column A 10,73,000, B 5,82,000 and C 5 lakh. Total 21,55,000 in the amount column. Second item in the old balance sheet, general reserve, it is already cancelled, no need to consider. Next item, creditors 2,50,000. As it is, you have to show this in the new balance sheet also, 2,50,000. Bills payable amount 1 lakh. Same amount you are writing here also, 1 lakh. Outstanding salary, a new item is given there in the adjustment. This is a liability, so it is coming on the liability side of the new balance sheet, 30,000. And asset side, cash in hand, no changes, 25,000. Cash at bank, what is the amount you have got in bank account? The same amount, 11,95,000 we are writing in the new balance sheet. Then debtors 50,000, stock new amount 4 lakh, unrecord asset 1,20,000, machines after subtracting the depreciation it is 1,90,000, building after depreciation 4,75,000, C's current account 80,000. Now you are getting total of 25,35,000 in the new balance sheet. New balance sheet total 25,35,000. Thank you.